Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, what we've got here, daily chart, the last three sessions, including today, you've got interaction with the 20-day simple moving average of the daily midband on the downside and the 9-day on the upside. So we are jammed in between these two. So here on the hourly chart, there's your 20, here's your 9. And with the exception of, attempts to break out, little attempt barely to break down on Friday, we've pretty much been in between those two. We battled over the new weekly pivot at 3660 yesterday in the afternoon. It looked like they had a decent little break there. They wound it back up overnight, and we're back now sitting between 60 and 66, between the weekly pivot and the 9-day. I'll be interested to see how this battle goes the rest of the day. The number one question that we wanted to answer yesterday was which side of the weekly pivot we were going to close on. Well, here we are, but they didn't take advantage down here. So this is where the bears tend to struggle. They tend to struggle in finding that extra layer of follow-through that's going to cause them to start to push and convert big areas like the daily midband, which on our stuff is the baseline area as to whether or not we are buy dips or sell rallies. So look, as long as we're above that green line, we continue to be buy dips. You can be short. We had a few nice shorts yesterday. But ultimately, these dips are going to get bought until that daily midband acts as and stays as resistance. And at that point, then it tends to be more of a sell rally situation. It's a little news based. It's not totally news based. You can see that it's come off pretty nicely from the those are December contract highs. The March contract highs are 37.07 even, but you can see whatever contract you're looking at, they've brought it down for the course of about 3 days. They gapped it up Sunday night. They filled that gap. They're trying to get back up above. What do the bulls need to do? They really need to close above yesterday's high, up at 36.91.5. If they can do that, then they can get back up into the 37s, and they can reach from there. Bears, close below the 20-day. Close below the 20-day. What nobody wants is like a 4-hour fight between 60 and 66. But we got to be careful of that, because when the tape does that, it makes you overtrade. It gets you chewed up. The volatility kind of goes away, and you start, taking little paper cuts here and there, and all that stuff adds up. You're better off waiting to see which way it breaks and then trading it in that direction, which is what we've been trying to do in the room. So we had a big start to the week. We'll see what it wants to do today, and we'll go from there. If they do bring it in and it holds in this, even if it comes back in this morning, and deals with this hourly midband, if that holds and you get a higher high, they can really go ahead and make a serious attempt at 92. You got volume weighted average price down there at 53. You see the hourly midband there at 52. So that's a prime time spot. If they're going to pull it in and buy a dip this morning, 52, 53 is a good spot for that. We've got our proprietary moving average sitting at 63, 5-minute midband about the same. So they meander between 4 a.m. and 7 a.m. Right at the 60 area. They've hopped it up, but they're bringing it back. I don't expect to do anything between now and the bell. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.